QuickBooks Online 2025 Payroll and Employee Reports. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody. Looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. We want the test drive down here. We're going to be choosing the United States version of the software and then verify that we are not a robot with that good old checkbox. And that will put us in. Let's close this first tab. We don't need that anymore. We're in the sample company file, Craig's Design and Landscaping Services. Open the major financial statement reports as we do every time. The reports on the left-hand side. We're in the standard tab. In the favorites, right-clicking the balance sheet to open a link in a new tab and doing the same for the profit and loss, otherwise known as the income statement. Tabbing to the right, closing the ham boogie so we have some elbow room in our report section, changing that range 010124 tab 123125, dropping it down for years. We want to refresh it. To do so, we run it. 2024 and 25 are now side by side, tapping to the right, repeating the process. Close that hamburger. You're crowding my space. 010124 tab 123125, and we'll select the drop down and see it in years. Run it so we can refresh it. 04, 24, 25 side by side. Okay, now we're looking at other reports, remembering other reports will typically give us more information about one or multiple line items of these two major financial statement reports, balance sheet and income statement report. This time, however, we're going into payroll. And payroll, whenever we talk about payroll, we have to mention multiple different things. One is that you have different options on how you're going to be dealing with payroll. And two is that payroll will differ depending on where you are at, because of the laws and regulations regarding payroll, which often include tax laws. Therefore, when we think about accounting, note the double entry accounting system is universal. You might be dealing with different currencies, of course, but the concept of debits and credits, recording revenue, assets, liabilities, equity, income, and expense is in essence the same. Where differences arise is in laws and regulations, particularly those dealing with taxes, because they're going to have a financial impact and therefore a bookkeeping impact. Many areas, including the United States, have substantial laws related to taxes for employees in particular and how businesses deal with the employees. So remember that in general, if there was no special laws with regards to dealing with employees, the transaction would be easy, just like any other expense that we paid. It'd be like paying the phone bill. We would just say, okay, money's going out. The other side's gonna go to the payroll expense. But we do have the issues, and therefore it's way more complicated than that in the United States. Quick recap of our tax system here. In the United States, we have federal income tax, so they have an income tax system for most of the revenue for the federal side that deals with hopefully paying the military and dealing with a lot less other stuff as they're cracking down, trimming down these days, which is incredible, holding those people to account. And then you have the state and local, dealing with state and local issues, which should be everything else on the state and local side, which could also have an income tax, but might have like a consumption tax, like a sales tax. So if we think mainly on the federal side of things, they have an incentive then to make sure they at least know that someone earned revenue so that they can report the taxes and the IRS is going to want to go after them. So in that case, then, they would like you as the employer to be responsible for withholding their taxes. How could they do that? They can have the leverage over you as the employer saying, do you want to have an expense for payroll expense? And we're going to say yes, because that's going to decrease our taxes. And they say, great, we'll let you do that if you not only tell us who you paid so we can go after them, but also do the withholdings for them. And so now we're involved. Now somehow we've gotten involved with the actual withholding process of paying the taxes for the employees. Now, remember, if they're not employees, then the question is, are they incorporated or not? If they're incorporated, the assumption is they're fairly larger businesses, and then the IRS already has their hooks in them. They're not going to fly under the radar as easily. If they're not incorporated, then the government's going to call them contractors, and they're going to want you to at least 1099 them. So you end up with this question of, if they're not incorporated, are they a contractor or an employee? The government's going to want to make them an employee and force you to do their work of collection with the withholdings. Therefore, if they're a contractor and you want them to be a contractor, you want to make sure that you're following the laws and regulations so that if you are audited, you can say this is why they qualify as a contractor, is the general idea. Now, if they are employees, then the question is, how am I going to pay for the withholdings and whatnot that I have to deal with? So we can do that a couple different ways. We might work with an external provider like an ADP or a Paychex. Those are just the big ones, but they would process the payroll, possibly help with other human resources things, laws and regulations, and give the pay stubs to the employees and so on and so forth, so that they have all the reporting requirements and deal possibly with the tax reporting. And then we would have to pull the information into our system to make sure the financial statements are correct for our reporting at the end of the year for external reporting purposes and or for our income tax reporting purposes. Or we can track the information within QuickBooks, which means we'd have to add an add-on feature. We would have to add more or pay more for the internal reporting that would be done within the QuickBooks system. And so you really want to think about, as a bookkeeper, do I want to take on payroll? If I take on payroll, do I want my default system to be working with a third-party provider who could possibly deal with the payroll outside of QuickBooks, allowing me maybe to specialize on making my bookkeeper more automated, more on a cash-based system, even if I have the payroll? Therefore, I would need a good accountant at the end of the year to reconcile those things as well. Or do I want to take on payroll internally with the help and use of QuickBooks, paying more for the QuickBooks system that might be paid by the client, and deciding how much more to be paid in terms of how much more support will I need for my reporting of the reports. Let's do a quick recap of the payroll. This is a flow chart. This is the desktop flow chart, but we're just looking at it for let me open it up here. We're looking at it for just the flow assumption for the employees, so we can identify what we would typically need to do. So if we have employees, we're going to be down here. The question would be then, how often are we going to pay the employees? You can pick. So the general picks would be, well, you can pay them weekly, you can pay them bi-weekly, meaning every other week, you can pay them in the middle of the month, or you can pay them monthly would be the general choices that would at least line up most closely with the standard payroll processes. So if we're going to, and then we have to say, well, how are we going to pay them? Are they hourly employees, or are we paying them salary? If they are paid salary, then it's pretty straightforward. We're going to pay them in essence the same amount each pay period. If they are hourly, then we're going to have to collect their hours somehow, which we might do within QuickBooks or in a timesheet that we'll then have to populate every time we process the payroll, which might happen weekly, bi-weekly, semi-monthly, or monthly. And then we're going to process the payroll. Now, when the payroll is processed on a weekly basis, bi-weekly, semi-weekly, monthly basis, then what we're going to have to do is possibly collect the hours to process the payroll so we can have their pay rate in there properly. And then we're also going to have to do withholdings at that point in time. So this is when the big activity happens, because we're not going to give them the amount that we agreed to give them, the amount they earned, but we're going to give them the amount after we took the withholdings that we are required to withhold. How do we know how much we're required to withhold? They will have given us that information with a W-4 form upon employment. So that means that we're going to give them a check for the net amount. We're going to give them a pay stub that even if that's electronic, because we're usually required to do so by law, because that'll tell them how much they earned, how much we took out of their pay for Social Security, Medicare, for their federal income taxes, and also for state taxes if there are any, and voluntary withholdings if there are any, such as benefit programs like a 401k plan or health care and whatnot. And then it gives them the net check. We have to give them that information on a paycheck by paycheck period, as well as a year to date period. So that's kind of a lot of information per employee, per paycheck, that we have to detail out so that we can properly report it to each employee by pay period and by the year to date. We also are going to have our taxes that we're going to have to pay over and above for the matching kind of taxes, which will include Social Security, Medicare, and then we also have a FUTA tax, Federal Unemployment Tax Act, that we have to deal with. All that's going to happen when we process the paychecks. Now, when we process the paychecks, that means that we withheld their money and we incurred taxes on their payroll expense, which is kind of funny, which we will then have to pay to the government. So after we process payroll, weekly, bi-weekly, semi-monthly, or monthly basis, we're going to have to then pay the taxes that we withheld from the employees, because we have to pay it on their behalf because the government's making us be their tax collector. And we're going to have to pay our taxes for matching Social Security, Medicare, and the federal income taxes to the government. So that's the normal cycle in terms of just the paying the taxes. And then there's reporting components that we have to deal with. And we typically can compare this to like reporting for our income taxes. In the United States, we have a 1040 that we prepare income taxes, and that happens by April 15th following the year of tax. And if it was a perfect world, we would pay the taxes during the year, which we typically do through withholdings, through our W-2 for most people. And then when we pay the taxes, we get a refund because usually we overpaid the taxes. In a perfect world, we would pay the exact amount of taxes, and the Form 1040 would just be an informational report saying, this is my income, this is my tax calculation based on that income, here's what I already paid you, no refund, no amount due. That's impossible to do with the federal income tax system because it's too complex. Therefore, we shoot for a refund, meaning we pay throughout the year. Why would we overpay instead of underpay? Because if we underpay, they're going to hit us with penalties and interest. So we shoot for an overpayment to not get hit with penalties and interest so that we can get, the refund. With payroll taxes, we can basically calculate it exactly. Instead of doing it on a yearly basis, however, they usually want it on a quarterly basis. That's going to be a Form 941 typically. So we're going to have the first 3 months, the first quarter, and then we're going to have to file the Form 941 saying this is the Social Security, Medicare, federal income taxes that we incurred based on the payroll wages. Here's how much we actually paid you, and we should be exact. We shouldn't have any refund or amount due. And then we do that for the second quarter, the third quarter, the fourth quarter, which is usually the report due in January of the following year. And then we also have the Form 940, which deals on a yearly basis typically, specific to the Federal Unemployment Tax Act, FUTA tax, that's what it's called, right? So we have that we have to deal with. And then at the end of the year, we've got the W-2s that we have to give not only to the employees, but to the government, which is going to tell the government how much the employees earned, so they can't really cheat on their taxes because we're giving the government the information about it, and we withheld part of their taxes and gave it to the government already. And we also have to so that's going to be we have a W-3, which is kind of like a summary of those reports. So again, all of that reporting, do we want to do it through QuickBooks and pay more to do it, or do we want to have a third party do it? Let's go back on over here and just check it out from this perspective. Here's the Form 941s. These are done on a quarterly basis. As you can see over here, you might be able to generate them through QuickBooks if you're doing the payroll within QuickBooks. And it's going to give you the federal income tax, Social Security, Medicare calculations that are going to be due. And then it'll say how much we actually withheld, and hopefully it should come out exact. here's what the Form 940 looks like. This is the end of the year federal unemployment tax, or FUTA, that we would pay. And then here's the W-2s that we are possibly most familiar with, reporting to each individual and employee. Here's the W-3, which is basically a summary of the W-2 forms. And here's then a W-4 form, the form that we would have to give to the employee for them to fill out so that we have the proper information to populate the payroll in our system and be in compliance with the withholdings in accordance to what they told us we have to withhold. Now, note that if you can imagine, we're giving the government 941 forms, basically, which tells the government how much taxes we have for payroll taxes, and the 940 as well as the wages, and then the W-2s similarly telling us how much we paid to the employees and so on. Then on the reports side of things, we should be able to reconcile that as well, because for our income taxes, we're going to have payroll taxes down here, or payroll expense. If we have a payroll expense that we can't reconcile to the 941s, that's going to possibly be a problem within an audit, right? The auditor is going to come in for our income taxes and say, hey, you deducted this amount for W-2 wages. Did you have that amount reported to us on the 941s as well, so that we can verify that you're properly in compliance with the payroll, with reporting payroll? We're going to have a deduction for the payroll taxes. So they're going to say, well, can you reconcile what you recorded for payroll tax expense to what we think it should be based on the 941s and the 940, and so on and so forth? So we want to be able to tie those out. So if you have a third party doing the reporting of the 941s, 940, and so on, they can report those. You might be on a cash-based system, in essence, reporting payroll as it clears the bank account, and then possibly use the CPA firm to reconcile any kind of timing differences that need to be reconciled, as well as the accounts that need to be adjusted, so that we have the same, so that we're reporting properly for federal income taxes and the payroll taxes. Or if we're doing it internally, we're going to be using the same data within QuickBooks to generate the reports as well as the reports in QuickBooks, and therefore hopefully they should reconcile, right? We should be able to tie them out and everything should be populated properly. All right, so that said, which accounts are we going to need reports for? Well, we're going to need reports that back up the payroll expense account on the income statement and the payroll expense tax expense account on the income statement. And we're going to have to break those out in a lot more detail than you might see in other types of reports, any other report that we had, because if we're going to use them to give all the information to the government, I have to break all that information out by employee. We also have to break it out by employee by pay period, so that we can properly give the pay stubs out to the individual employees. And then we also might have on the balance sheet payroll liability amounts. Why would that be the case? Well, remember, if you're on an accrual basis, when you pay the employee, you're going to withhold money for the withholdings, which should be a liability at the point in time they withheld it. We also have a timing issue with payroll, meaning if I pay people like on a bi-weekly basis or even a weekly basis, then the pay period is going to end, say, on the Friday of every other week or something like that, which will not necessarily tie out to the end of the year, which happens on December 31st. So now you have this difference between the timing of payroll and the end of the year timing. And so the question would be, the payroll might not be processed for a 2-week time period until January 1st of 2025, when you want to have the year end closed properly reported as of 12/31/2024. And so that would mean that if you didn't record it till 2025, January 2025, you would have recorded all of it for 2 weeks in 2025 when actually the 2 weeks happened, all of it in 2024. So you might need an adjusting entry for that purpose as well. And so if I go internally to the reports over here, we go to the reports on the left-hand side, and I'm going to close up the ham boogie. We scroll down to who owes you, expense, sales, employee. So we have the employee reports. Now, the sample company file doesn't have all of the reports in them at this point in time because the payroll is hard to kind of mock or mimic the payroll report because it happens in real time. So you have to, when you practice payroll, the problem practicing payroll is that you can't like go back in time or do a full years of payroll because you need to practice kind of in real time because that's how the software basically works. So we do have few courses. I'd like to update them again, but you can get a good idea of how the payroll works, focusing just on the payroll process. So you can get a better feel for it. Payroll, because of all the complexity, has gone from something that should be very easy to something that's a specialty in and of itself, right? Just payroll is kind of a specialty in and of itself because of the complexity to it. But we would have your employee reports here, and then you're going to have more payroll reports down here is where they're going to be located here. And again, what reports would be there? Well, if we had all the payroll information on, then it's going to give us basically our payroll register report, which is going to break out, the payroll, like we say, gross pay and the withholdings, the Social Security, the Medicare, both for the employee side and the employer side, and so on and so forth, and various different detailed amounts. So if you turn on payroll, just note that payroll adds a significant amount of information into the system because of the detail you have to track. Whereas if you did payroll externally by like an ADP or a Paychex, you only really have to pull in enough information for your financial statement reportings to be correct, which might just be an adjusting entry that you need to do on top of the actual cash transactions. So payroll, totally doable to do within QuickBooks if you pay for it, and you can have various levels of support. But even if that is the case, just remember that's going to add a lot of complexity and a lot more data into the system because the data is going to be necessary in the system for the system to help you to generate the reports, 941s, 940, and so on. And it's also going to mess up your ability to just use bank feeds to create your financial statements because there's going to be a accrual component to processing the payroll. And so once you have that payroll, you're going to have a bunch of reports that will give you basically the payroll register, some of them possibly being easily exportable to Excel, which is kind of nice as well. But that's going to be, the general overview of the payroll reports and payroll process and what they do. So, I keep on, just as a side note here, my producer keeps on asking me when I'm going to be done with particular projects. I don't know if you have a similar situation, talking about employee situations. And I'll tell you, I have two conditions on when I'm going to be done with a particular project. I've got two conditions. Number one, I'm good. Condition number two, I'm ready. That's right. I'll finish when I'm good and ready. Not good or ready, mind you. When I'm good and ready. When I'm good and ready, that's when I'll do the work.